Oh, can you hear me now? Sorry, I might have bumped it. Do you guys hear me now? Instead of going through each section, even though some of them are quite strong, we're going to say, hey, let's take 2 or 3 weeks in a row and work on any sections you have that are ranking lower in your overall assessment. Okay, so let's dive in. Let's start here. Where'd the markets end up? Pretty good. S&P up 0.19. The Russell 0.67. The NASDAQ ended up flat for the day, though we have a couple of tech-oriented trades that actually fared pretty well, so we can live with that. Palantir we are looking at is not one of them. Funny that Palantir dropped 5%, Micron jumped 10%. Very, very interesting. Okay, what else do we know? Tesla annual deliveries fall for second straight year. They're down 2%. Gold and silver advance. Well, they did, and then they dropped off. So that might have been a little earlier in the day, 3 hours ago, because at the end of the day, this thing fell. What else? Oil falls. Not much there. Let's look at the economic calendar. So let me reload this here. Jobless claims came back better than expected. I don't know why it won't upload that. New Year's manufacturing came back steady. Next week, what do we have? It's jobs. It's jobs. We have ADP and job openings on Wednesday. Jobless claims on Thursday. Non-farm payrolls and the unemployment rate on Friday. Jobs is the concern right now, right? Jobs is the concern that we've been seeing. Now, we had a favorable GDP recently that showed that there was growth. We had a decent inflation report that showed it was stable, not stable at the level they wanted at, but at least stable. So as we think about should the Fed be cutting rates, the only aspect of that narrative that would warrant would be a significant weakness in the job market. Right? The Fed's key responsibilities are to keep inflation down and employment up. So if the employment picture next week comes back okay, it's going to be very hard pressed to create a scenario where we think, oh, the Fed needs to cut the rates. You're like, well, what do you mean they need to? If inflation is steady, jobs are steady, growth is steady, that's not really making a case. Now, if we start to see job weakness, then that does have the ability, right? Welcome to everyone else who's joined us. We were very light there for a little while, so glad to see some of you guys popping in. Good to see you all. Okay. Okay. Sorry. Let's see here. Okay. That's it from what I see here. Let's go take a peek at the Fed Watch to see if the market agrees with me. There is not really a case being made. Well, it's gotten a little bit better. Meaning we were at 85, 86% against. And then it's dropped down to 82, 83. There's really not a lot. Really not a lot there. Okay. That's it. Let's go look at the market. Let's go look at the market. Whoops, not that. That's not what I wanted. I want this. And let's start down here at SPY. And what do we see here? Well, the market did advance, but it was all over the place today. It was a little bit higher at one point, almost back to yesterday or Wednesday's highs, dropped well below Wednesday's lows, and then recovered back into a spot. That is positive, but not by much. Now, on Wednesday, it was a full day, and we had average volume, not above average volume. So there is no increase for sellers right now. Still feels like a mild pullback. Tell me if you think I'm wrong. As we look at this, and we just got this new high from this bounce, there's a low, and we're thinking to ourselves, possibly another low, right? Possibly another low. Where would that next low be? Right about where we are. Right? If that's where it is, if this is what's being established as a low, honestly, it could even come a little bit more going into next week. Thinking of pause, Gabe said, Gabe, I'm agreeing with you 100%. 100%. Right? If this is the selling cycle, there's not much, even if it comes a little bit more. We've gone from 691.66 to 683. That's 8 points on a $691 index. You're talking barely more than 1%. So I look at this just fine. This looks fine. I'm not trying to get rid of old trades. I'm thinking to myself, this looks quite reasonable here. Quite reasonable for us. Okay. What else do we need to look at? Let's take a look at our VIX. How much fear does our VIX show? You guys see what I see here? How much fear do you see in this bounce from here to here? Hardly any fear. There's no institutional fear. There's no institutions are, ramping up. There's just a little bit of shuffling going on. Just a little bit of shuffle. Okay, now let's pull up our posture. Talk through it. A pause for the institutions as well. Absolutely. Absolutely. Pausing, but not necessarily rearranging. If they were rearranging, we'd probably see more. We would probably see more fear. If there was more than just that, we would probably see fear. But we're not. Is that a usual transition to the new year? Let's go back. Let's take this back. We're going to go 5 years daily. We're going to go SPY. Now, right at the end of 21, what did we see? Here's the 31st. Here's the first day of the market up a little bit. Second day, kind of a pause. And then from there, it turned negative on us. But that was going into 22, where we actually ran into a recession. So does that count? Not necessarily. Now here, oops, shit, hold on. Here is coming out of, oh geez, there we go. Okay, it worked. Here is the end of the year at the end of 22, and you can see coming out of this, it started getting bullish. So there's really not a huge rhyme or reason at the end of the year. Kind of flat and sideways is the most that we tend to see, right? You can see here, flat and sideways. But last time it went bullish. This time it was a little less so. Here is, sideways, sideways, sideways. It sold off, then it bought. It's mixed. It's mixed. Yeah. But let's talk about our posture overall. Okay. Where are we? We're at a 5. Did anything happen this week that would make us think, oh, we don't really warrant a 5 anymore? I'm going to say no. But let's go through it. Long-term trend. We're at a 1.25. Came down most likely, or most recently it came down. What do I see here? 1.25. Very easily, 1.25. Okay. Let's keep looking here. The short term is pretty fixed. I don't see anything here that looks like it's going to be worse or better. It's going to be the same going in. So there's 2 there that are going to stay exactly the same. No change. All right. Let's go take a look at volume now. Okay. Tell me if you see something differently than I do. Volume, average, but not above average. This is still a tie. 2 buys, 2 sells, 2 ties. We're still a tie. and a tie goes to the buyer. So I'm still going to be at a 0.25. Now, if it's a tie because we don't have anything, if it's 0, 0, 0, well, then that's a tie that's a neutral because we don't even have any evidence of anybody doing anything. So that's going to stay the same. And lastly, the VIX. I think that sectors and I think that sectors and major market are both also going to be very, very similar. So yeah, should be interesting. All right, let's keep going here. The VIX, I believe, will be unchanged as well. Let me go to it. If I can find it. All right. And the VIX looks pretty much the same as well. It's not a lower high. Well, actually, maybe you could. No, I would say no, not yet. What was I looking at just now that had me hesitate? I'll show you. We went up, and this has actually come down below the body, but I would probably want it below the shadow before I did anything with it. Okay. Okay. VIX staying the same. I'm gonna say we're gonna stay at 5. Nothing's gotten worse. Right? Nothing's gotten worse. Okay. Where else do we see? Now, tell me if you disagree with what I'm seeing by way of market posture. Okay. Gabe says, yeah, he agrees. Let's go through our watch list. Let's see what's cracking. Things we're in, things we're thinking about. Let's get Apple opened back up here. 6 months. Okay, let's see. Apple. Yeah, Apple's struggling. We thought we saw something coming. If it holds the 50 and tries to bounce from there, I think there's a possibility. If it holds the 50 and tries to bounce. Okay. Now, AMKR. Now, this was one that was kind of, we put it on. This was our support level. We got it here. The next day it started higher and dropped, holding. I'll tell you, this one was tough. This could have shook a few people out. This could have shifted a few people out. The volume was so light, and you can see today we're back not just in business, but in favorable. back to profitable. So anybody still in that trade, let me know. Took a little bit for that one to come to fruition, but looking good. Worth carrying through the weekend? Yeah. Still in, John? Yes. Well done. Well done. Patience paid off. Patience paid off. Love it. Okay. Amazon. Worth looking at now? I'm going to say no. I'm going to say if we missed it, we missed it. I guess it's a possibility, but I'm going to say more likely no. Okay. Let's see. Amazon pulling back pretty steeply, but we'll see if it turns into something. AVGO still kind of down a little bit. Okay. AXP. Maybe. I'm okay with one little drop as long as it's above the 50. As long as it's above the 50 and is still giving us a reasonable bounce. So those are two things to be thinking about. BAC. It's a big one, but it's viable. I'm gonna wait and see what the what Monday looks like. Micron had a great day. A great day. Probably too much for an entry. Yeah. That could be a tough one, huh? Okay, let's keep going. City. Much better. Much closer. You can see the stochastics hasn't turned yet. So to some extent, we're still kind of watching and waiting there. But there is something for us developing that very much could play out for us. Okay, let's see. I think you could take this now. The candle looks good. The stochastics is still a bit iffy. But I think that's absolutely valid from a price action standpoint. If you're looking for both things, then you would probably want to wait a little bit. Yeah. Yeah. So I think you're fine. Did you take it or were you thinking about it? Yeah, let me know. Thinking about it. Yeah, I think it's valid for sure. Definitely valid. Okay. Caterpillar, huge moves. You could some of these are just like exploding out, which is a little frustrating, right? A little bit frustrating. Why? Because we want them. We can't just jump right into any entry there. We've got to make sure we have what we need. So if your trading plan allows, agreed. CIEN starting to turn, Coherent starting to turn. All of these that we're pulling back and we're thinking to ourselves, yeah, that's something we could do. Right? That's something we could do. And then we're kind of waiting to see if it gives us confirmation. Okay. We'll keep going. Credo. No. Cisco. If you were in Cisco, you probably have at this point called it. I would have expected maybe even Tuesday or Wednesday would have been. It hasn't broken the support, but it's really rolled over significantly, right? Significantly. Okay. Delta. Still viable, still setting up. The Dow holding up. Fox looks like it could be starting to turn or preparing for a turn, getting positioned that way. Okay, let's keep looking. No consistent trend in the last 3 months for Cisco. Fair. Here's First Solar. Big turn. Big turn. And that's sometimes the problem, right? Is it too much of a turn already? That's what we're asking ourselves. Okay. GE, big turn. It's tough. We're going to see if this is sustainable or if it's just kind of a start and then it hiccups a little bit and then it gives us something to latch onto early next week. Okay. General Motors, setting up beautifully. Google, still kind of thinking about it. Goldman Sachs, huge turn. Huge turn. Howmet, big turn. IBM, no turn. Intel, all right, Intel. I hope everybody was patient. That one we sort of held through one day at a time and got where we needed to go with that one. Who's still in it? Let me know. Who's still in it? Let me know. That's what I'm wondering. And that one definitely looks good to carry. Very strong. Very, very good still. Okay. Okay. Still in. Love it, John. John and I are in several things. IWM. Nothing really there. Okay, let's see. JCI, trying to turn. Lumentum, trying to turn. Lam Research just exploded out of its 8.5%. There's really not much we can do with those when they move like that. That's what makes it very difficult for us. Okay, let's keep going here. Macy's viable today. Anyone think about that? Start prophesying them. Hey, these were all ones we were looking for. The problem is the trigger is just too big, right? The problem is the trigger is too much. We'll have to see if it was just like an overwhelming first day, but then it sort of eases up and gives us something, or not necessarily. Okay. MasterCard, nothing there. Meta, we warned, could be pulling back. Morgan Stanley looks good. Looks good, like it's trying to turn into an exit or an entrance. Yeah. Okay. Microsoft. Look at the last trigger. On which one, John? Microsoft turned hard down. It's such a weird mixed bag day today. Some things are outstanding and some things are getting demolished. Micron. We were definitely looking for a new entry on Micron, and now we're seeing this thing just telling us we're going to have to just kind of wait a little bit still. Okay. Netflix, horrible. Nvidia looks okay. Palantir got smashed. The Q's, kind of a mixed bag. Still overall fine. Still overall holding up. The Real still in a pullback. Let's take a look at that one. I think that one's looking viable. Rocket Lab trying to make a turn. Roku. Nothing. Ross Stores. Kind of flat. RTX is turning. Silver started good. Gave a lot of it back. SNDK, huge move. That's 15%. That's the problem, right? We're watching these things looking for a potential. Now, if you had an alert set, you could say, oh, if it breaks this, but I mean, sometimes it does this. Comes back down, and then you're like, well, wait. Yeah, it's hard. It's hard when things make big moves coming out of these consolidations. SPY still looks fine. STX making a turn. Teradyne making a turn. 7.5%. Yeah, they just out of nowhere came hard and fast. TJX still setting up. This looks fine. If it turns, it gives us a trade. That's a hammer. So there's still plenty of opportunities moving into next week that we're going to be looking for first week of the year. Tesla continuing its sell-off down. Taiwan Semiconductor had a big move up. Okay, here's the VIX holding up fine. WBD, no, I told you I'm not really feeling this one with the news against us. With there being news, there's not much we can do with that. WDC up 8%, 9%. Walmart. Okay, Walmart's holding up. It's good to see. We put it on. A little hiccup. Now we're thinking, hey, maybe this thing just needs to go from here. Okay, we'll give it that opportunity. So am I carrying that one through this week? Absolutely I am. Basic Materials had a big move today. Communication Services pulled back today. Energy had a big move today. Financials had a pause today. There was some financials that look good, but there's still some more. Still some possibilities there for us. Industrials, big move today. Technology, pause today. Staples, not much today. Utilities, a little move today. Healthcare, pausing. Consumer discretionary got hit pretty hard. I don't know. Actually, as I go through this, I'm thinking to myself, maybe the sector rotation is not a foregone conclusion. And we could see a little shift there. I'm not sure. It's hard to read that. Overall, though, I'm going to say, number one, my bullish posture prevails. It's gonna stay firmly in a bullish range. Number two, our watch list still looks quite good. I mean, look how many of these stocks that we're watching took these big moves today. Now, is it unfortunate that they moved as we were waiting for entries? Well, yeah, that's always hard. That's always frustrating. However, I do think that the fact that they are bullish, the fact that we do still see bullish signals, is confirming the strength of our overall watch list, especially our short list. So are we going to maybe shake it up a little bit, do some searches at the first of the week or the first of the year to get it as good as it can be? Absolutely, yes. Yeah, in fact, I think this next week, Tuesday, Thursday, I'm thinking I'm going to try to get 2 or 3 sectors searching per, so that we get all our growth sectors researched, realigned, ready to go. How am I feeling going into the first of the year? Good. Market's bullish, staying bullish. We've got some employment data on deck next week. We'll see how that comes in. Overall, I feel pretty okay about what I'm seeing and what we're gonna see going forward. Okay, questions, comments, or concerns. If there's any stocks you want to look at, we have a little extra time. It's a light group today, so those of you listening to the recording, we missed you. Yeah, let me know your thoughts. TTI. Okay, let's take a look. I think it looks bullish. And it looks like it's trying to accelerate if you look at your stochastics. Similar to like back here when it first popped out. And then it made another one, and then it looks like it's trying to do another one. Volatility 74%. It's pretty high. Volume's only around 2 million shares. I'd be careful what you're seeing in the options. I'm going to take a quick peek on my side. Yeah, there's only monthlies, and the open interest is actually quite strong. 10,000, 3,600, 3,400. I would be okay, actually, as I look at this. 15-cent spread, 15-cent spread, 20-cent spread, 20-cent spread. It's not until you really get deep in the money where there's less people trading. So I would actually feel okay buying it out of the money and watching it go in the money. Yeah. I don't know. Doug, did you look at the options on this? I feel like they're not too bad at all. Not too bad at all. Yeah, 30 days. So 14 days is where I looked at first, but you really only have 15 or 50 essentially, right? Now, if you go out 50 days, yeah, that's true. You're actually in a much worse spot. You would have to basically trade for the 2 weeks using the current options, because if you go out to February's, it drops off really sharply and the spreads widen. And that is sometimes a thing, right? Sometimes what you get in one month, you'll get in the other months. That's not the case here. So good thought there, because if you were to go 15 days out, you've got 2 weeks. You could make a trade with this thing, but not much more than that. And if you went out to February, you're going to find it's a much, much worse prospect as far as that goes. Took a trade on TSM and it's been, yeah, TSM is good today for sure. For sure. It's interesting to see how mixed today was, though, overall. Very much. Very much a mixed bag. Okay, well, what's next? We are going to be changing our start times to 9:30 p.m. Eastern. 9:30 p.m. Eastern is where we're going to be putting our time frame to. That'll start on Monday. That'll start on Monday. PM. No, AM. Sorry, did I say PM? My bad. Our opening market is going to be 9:30 to 10:30 Monday through Friday. So instead of 9:15 to 10:15, where we start 15 before, we'll start right at market open. That'll give us a full hour of open market time. Doug had a good day. Gabe had a bad day. Well, I'm sorry to hear it, Gabe. Sorry to hear it. Let's fix that for next week. Sunday, normal time, 11 a.m. Eastern. We'll market posture together. And then next week, we'll roll into the new year with the new schedule, and we'll see how we do. Great to see everybody. Happy New Year to you. January 2nd, 2026. Let's make 2026 a phenomenal year. Best year yet. Have a great weekend. It feels so weird to me. I'm like, what is it, a weekend? Is it a Monday, a Tuesday? What day is it? It's Friday all day. Now we get the weekend, and then we'll get back into the mix of things. Best year yet, starting Sunday when we posture the market. Thanks, everyone. Have a great rest of your day. Great weekend. See you soon. As always, happy trading.